When it comes to investing, fees are crucial. The lower the fees, the more money you keep in your pocket. That's why so many investors are drawn to zero-fee funds like Fidelity's Zero Total Market Index Fund, also known as FZROX. But is this too good to be true? Is there such a thing as free lunch? Hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. In this video, we're going to take a closer look at FZROX and what makes it so unique. We'll also explore whether or not a zero fees comes at a cost. Fidelity launched its Zero Index Fund in 2018, garnering a lot of attention. And well-deserved attention, given that for the first time in the index fund history, Fidelity was introducing funds with zero expense ratios. That's right, you get to invest with Fidelity for free. There are 4 specific funds that were introduced. Fidelity Zero Large Cap Index Fund, also known as FNILX. Fidelity Zero Extended Market Index Fund, also known as FZIPX. Fidelity Zero International Index Fund, also known as FZILX. And of course, its most popular and the topic of today's video, Fidelity Zero Total Market Index Fund, FZROX. On the surface, the Fidelity Zero Total Market Index is a simple total US stock market index fund. Very similar to the original Fidelity Total US Market Index Fund, the Fidelity Total Market Index Fund, FSKAX. It aims to invest in pretty much all publicly listed companies in the United States. And another nice feature about investing with Fidelity is that there is no minimum investment requirement. Yes, that is right. Not only does it charge you nothing to invest with, you don't have to bring a minimum investment to play. Vanguard, as many of you already know as my personal favorite investment firm, often has a $3,000 minimum in order to invest with many of its index funds. Well, with Fidelity, no need to save up $3,000. You can start investing right away with anything you have. Maybe there is such a thing as a free lunch? Well, before we think Fidelity and FZROX is the greatest thing since sliced bread, let's cover some other not so well-known facts. A lingering question that many of us, including myself, have asked when we first hear about FZROX is this: how can Fidelity not charge a fee with the FZROX and its other zero index funds? Are they just being generous? Is this part of their Give Back to Society program? Well, no, far from it. Fidelity is not a charity, and they're not looking to lose money. They're a private firm and brings in billions of dollars in revenue every year. Therefore, though Fidelity doesn't specifically make money from FZROX, they are deploying it as a means to make more money down the line. How? Through a strategy called Loss Leader. It's designed to get investors in the door so Fidelity can cross-sell the customers into different funds, financial advisor relationships, and brokerage accounts. It's similar to Costco's $1.50 hot dogs. For decades, Costco has been selling the signature food court item, a foot-long hot dog and a soda for $1.50. It's how I fed my kids since they were toddlers. Costco's strategy isn't to make money from their $1.50 hot dogs. It is to get people to come to Costco, unsuspecting, naive customers like myself. I would initially go to Costco for some hot dogs, but before you know it, I find myself in one of their aisles buying toothpaste, blankets, liquid soap, and anything else you could think of. In the same way, Fidelity's strategy is to use FZROX and other zero funds to lure in new customers to Fidelity. And from the looks of it, it looks like it's worked quite well so far. FZROX has attracted nearly $12 billion in assets in a period of just under 4 years, competing directly with index fund giant Vanguard. Now, they haven't disclosed how much they're making from all the cross-selling to new customers, but I'm assuming with $12 billion in assets under management with this one fund alone, they're finding some level of success. Alright, you might be thinking at this point, I get it. Fidelity isn't a charity, and I see their business strategy with FZROX. But that is cool with me. I don't get easily swayed by fancy new products Fidelity is going to try to sell me, so I'm just going to have the cake and eat it too. However, before you jump into that conclusion, let me share with you another interesting fact about this fund. Fidelity Zero Total Market Index Fund advertises itself as a fund representing the total US stock market. But how true is this statement? One of the most comprehensive US stock market index is the CRSP US Total Market Index, an affiliate research institute of the University of Chicago Booth School of Business. Based on this index, there are approximately 4,000 US companies total across mega, large, small, and micro cap. However, when we go to Fidelity's website, we see that FZROX represents slightly under 3,000 companies as of September 2022. Why is that? Why the difference? The reason is because FZROX does not track the CRSP US Total Market Index as its benchmark, or other more well-known total market indexes like Dow Jones US Total Stock Market Index or the MSCI US Broad Market Index. It tracks a proprietary index Fidelity created in-house, the Fidelity US Total Investable Market Index. According to Fidelity, this index is designed to reflect the performance of stocks of large and mid-cap US companies. It has a certain criteria for excluding companies. For example, the index excludes companies with market cap under 75 million or with limited trading volume. And it also caps the index to 3,000 companies. Less if the final count does not survive the liquidity and investability screens. Fidelity Total Market Index Fund, also known as FSKAX, is Fidelity's original total market index. It has an expense ratio of 0.015% and represents close to 4,000 US companies by tracking the Dow Jones US Total Stock Market Index. I'm assuming Fidelity is able to save some money on FZROX by tracking its own in-house index versus paying a licensing fee to use other benchmark indexes. Now, before you think Fidelity is ripping you off, we do need to understand the scale of this impact. A difference between 4,000 and 3,000 looks like a lot on surface. However, we need to remind ourselves that when a company is being represented in these funds, they're being represented based on their market cap, their size. So a small company would not have the same level of representation as big boys like Apple or Google. The percentage representation of the top 10 companies between FZROX and FSKAX is barely noticeable. FSKAX at 23.33%, and FZROX at 23.41%, a difference of 0.08%. What this means is that companies that are excluded from FZROX from FSKAX are actually less than 1% of the total market cap. So while the Zero Fund does exclude close to 1,000 companies from its index, they're all very small companies and the impact is not as big as we might deem. And this is reflected in the returns as well. When we compare the 3-year returns between the two funds, there is slight difference. FZROX has a slightly higher return at 7.68% versus FSKAX at 7.51%. The Zero Fund was created in 2018, so we can't go back any further. The difference is likely driven by the fact that the largest US companies in these cap-weighted funds have higher returns than small cap and micro cap funds excluded from the Zero Fund. Of course, only time will tell if this trend will continue. My primary concern with the fact that FZROX follows a unique in-house index is this. We don't know how and when it can change. Right now, it looks like it doesn't deviate too much from other total market indexes in the market. However, only time will tell. Could Fidelity one day decide to exclude mid-cap companies from the index? Or other high-performing companies? Likely not, but who knows, right? And this leads to another interesting fact that should make us pause before we invest everything into the Zero Fund. It's portability. When you decide to invest with FZROX, you have to consider it like a marriage. You're making some solid commitment. Until death do us apart. What do I mean by this? Most other funds in the market are pretty flexible when it comes to portability. You might start out with a fund like FSKAX, Fidelity Total Market Index Fund, but you might decide that you want to switch. Not a problem. These kinds of transfers are pretty common and called transfer in kind. You simply move your investment to the receiving investment firm as is. There is no selling or buying involved and no tax consequences either. However, not so with FZROX. With the Zero Fund, you cannot take your investment out of Fidelity without selling your holding. And doing that will mean you have to pay capital gains tax. Now a caveat, if you're on a tax-deferred IRA, you don't have to do that. If you're a lifelong Fidelity customer and have no desire to ever transfer your money out, this poses no problem. You're literally having your cake and eating it too. Bravo if you're in this situation. However, many of us may not be so fixed. We might have started out with Fidelity because they had an office near our work. Or we opened up an account with them when we were in college and just kept doing business with them since. The bottom line is that FZROX doesn't provide you a level of flexibility that other funds do. Another small disadvantage is that Zero Funds are only available through Fidelity. This could add another administrative layer to managing your money. If you have all your money with a different firm like Vanguard or Charles Schwab, it's pretty inconvenient to open up an additional account with Fidelity simply for the purpose of saving a couple basis points on fees. A $10,000 investment in FZROX versus VTSAX saves someone a whopping $4 a year. You have to ask yourself, is the additional admin work worth the cost? Alright, I shared with you a lot of things in this video, so let me give you my personal take. Vanguard, as the pioneer of index funds, used to offer the most cost-effective index funds. Not so anymore. Due to competition, the cost of most index funds have fallen dramatically over the last few decades. A great news for average investors like you and I. Today, we can easily invest in an index fund for less than 0.1% expense ratio. Most often, even less than 0.05% expense ratio. That said, I feel like Fidelity's Zero Total Market Index Fund, the FZROX, is more of a marketing strategy than a product that meets most investors' needs. Yes, free beats even the cheapest cost. However, the issue I have is that Fidelity achieves a 0% expense ratio by tracking its own in-house index. And who knows where this index will go in the future. I'm not sure that risk is worth saving a few dollars each year. In addition, when we add the lack of portability, I just don't feel comfortable with that level of commitment. I mean, I do like Fidelity, but are we talking about marriage already? With that said, I would still invest with the Zero Fund if it was the best option available in my company's sponsored 401k. Thank you guys for watching. If you'd like to learn more about some of Fidelity's other great funds, check out my video here. Until next time, all the best.